Hello, this is Mark from tradingform.com and welcome to this video on a simple S&P 500 swing trading strategy. Now we've all been there when the market is showing a good trend, we've opened our trade and the price has immediately reversed against us, maybe even taken out our stop loss before continuing in the original direction. Now this can be very frustrating, and one of the ways to deal with this, and in fact to take advantage of it, is to use a swing trading strategy. Now when we're looking at swing trading, we're looking at the times when the market retraces a little bit or even a lot against us, and use these as buying, in this case, looking for long trades, as opportunities to enter a trade at a better price but still in the direction of the dominant trend. So in this video, I'm going to look at this simple swing trading system. I'm going to look at the actual system that I'm going to suggest. I'm going to look at the results of a backtest of this strategy. And then finally, for people who are interested in checking the robustness of strategies, I'm going to look at random entry to see how it compares to the strategy and in particular the entry system. Okay, so nice and quickly, the trading strategy is really just comprised of three elements. Now the first of these is a entry filter, and I'm going to use one of my favorite technical indicators, which are the standard deviation channels, these straight channel lines here. I'm going to use these quite simply as an entry filter. When they're pointing upwards, I'm only going to take long trades. And in fact, I'm actually in this particular case only looking at a long trading strategy. So when the channels are pointing downwards, we'll be in cash and waiting for the market to move back up again. Now the next part of the system is the exit closing system, which is these dashed lines, which are Bollinger Bands. And finally, the entry trigger. And the entry trigger is a candlestick based method. Very simple. I'm looking for candles that are moving against the direction of the dominant trend. So in this case, we're looking for long trades. So we are looking at red candles that close below this standard deviation line. Now, the candles themselves, I was originally looking at Japanese Marubozu candles, which I'm sure many of you will know are these totally full candles, complete green one here, and down here we've got a complete red one. But in fact, the results show that I don't need to wait for these relatively rare candles. And in fact, I've got a system that is just simply a fixed percentage of the overall length or height of the candle. And I'm using a fixed percentage candle that has a body of at least 65% of the height of the candle. Right, how have I done this backtest? Well, I've done it using an Excel spreadsheet, and this is the one that I have used. Now, this is an example of a trade-informed backtest spreadsheet, which is a great way to test all sorts of trading strategies, any markets and any time frames. They're quite simple to use for anybody with some Excel skills to test their own strategies, refine them, and see what the good points are and the bad points are of their trading strategies. Now, there is a link on the screen and a link below if you'd like more information, and you can click on it if you'd like to find out more about these trade-informed backtest spreadsheets. So over here on the left we have the data. This is the S&P 500. I'm using the daily time frame, which I do think is an excellent time frame for looking at trend following. Even though this is a swing trading strategy, we are still looking for markets that are obeying and following relatively long-term trends. And I think the daily time frame is the one of, or possibly the best time frame for those types of trades. And we've got the technical indicators here in the middle, and over here towards the right we have the actual trading strategy. Now we've got here a results tab, and we can have a look at some of the inputs. Now I have used stop loss here, but what I'm really trying to get at, this is a simple strategy. I'm not trying to show a over-optimized curve-fitted strategy. I could get rid of this stop loss and the strategy would still be profitable. Okay, so what are some of the things that I've included in this version? Okay, well, I have used a stop loss. I haven't used a profit target. I've used a Bollinger Band. I've slightly tweaked it here. I've gone for a multiplier of 1.5 rather than 2. I've used a linear regression offset of 0.5 standard deviations, and when I was saying about the candlestick entry, I'm using a coverage here of 65% of the entire candle height. Now we can see from the capital graph that this looks a fairly nice trading strategy. This is certainly the sort of capital graph that I would like to see on my trading strategies. Got a couple of flat areas here. This is of course when our filter is pointing downwards, and in fact we can identify them here. We've got the dot-com bubble and bust, and here we have the Great Recession, 2008-2009 stock market crash, and here just at the end we have the 2016 still going on stock market wobble. Okay, so these are the sort of results that we're getting. We're showing a net profit over the period. We've got a profit factor of nearly 2.5, which is the gross winning trades compared to the gross divided by the gross losing trades. We've got a nice healthy win percentage, 72%, and we've got a maximum drawdown of 6.9%. That's a very nice low drawdown, and certainly something that I would be quite happy to see in any trading strategy that I was using. Now I said at the beginning, we've got some results here, but how can we be sure that these results came from our entry trigger and aren't just being caused by, well, probably by the entry filter? Well, one way that we can test this is to use random entry. Now I've designed into this spreadsheet already a way to test the same strategy using the same entry filter and the same exit, but without the candlestick entry, and in fact using a random entry. And if I just click back to here, I can double click here, and this has changed the strategy being tested to a random entry. We can see that of course the capital graph has changed, and so have our results here. Now it's nice, I can just click any button and the random entry will change. But what I've also done is just put a simple test here, and we can take a sample. So I'm going to run a very quick sample just by clicking on this button, which will test it 5 times and give us our combined results here. We can see as the results appear that we get some results that are pretty decent really. We've got, we're still making a profit over this time period. It's quite variable. We can see it varies from fairly small level of profitability to relatively high. We're showing consistently above 50% level of winning trades, winning percentage of trades, which is very good, something that I'd be very pleased about in pretty much any strategy as well. And again, a drawdown which is slightly higher, but this is only to be expected. We've got a completely non-optimized strategy, and again 16.7% is relatively, I say relatively decent under the circumstances. If I want to test it again, I just click the button again, and we get some updated results. Okay, so we do have some results. We've got some, in fact, looking at these second lot of results, they've changed quite a bit here. In fact, they're consistently higher, but still a lot lower than our original entry. Now we can test this again and again, and it would be interesting to do so. But what we've got here, really for my mind, is a couple of things. With firstly, fairly simply, but at least we have shown that our entry system works better than random entry, which is very encouraging. Secondly, we've shown that the entry filter over now a number of different tests has been consistently showing a profitability, a number of winning trades above 60 and even 70%, which is very encouraging again. Finally, our max drawdown, although still higher than our original, is within an acceptable level. So there we have it. We have a trading strategy, a nice simple trading strategy, a way to trade using historical data, the S&P 500. Now please, if you're interested in more videos like this, do subscribe to the channel and also use the comment section below. Tell me what you think. Tell me anything that you think I should include in this test or not include in this test, and anything else you would like to put relative to trading the markets. And for more trading information and the financial markets in general, please go to www.tradeinformed.com.